Alright, what is going on, people? I hope you're all doing well. Firstly, I'd like to start the video by saying thank you for 4,000 followers on Instagram and thank you for 3,000 subscribers on YouTube. We have grown a lot in this short period of time. I've only began posting consistently on YouTube since the beginning of August, maybe just before, but we've grown quite a lot. And as a thank you, I've been doing a lot of giveaways. We've done a giveaway at 2,000 followers, we've done a giveaway at 3,000 followers, we've done a giveaway at 4,000 followers. I've given away $150, I've given away opportunities for people to join in the team for free. And for the 4,000 follower giveaway, I actually opened the opportunity for 6 winners to join in the team. Let me just show you a quick example. For example, let me show you the winners. Alright, so here it is. So when I first I said that I would only be taking in 3 people, but I ended up selecting 6. Okay, now as you can see here, these were the lucky winners. All they had to do was simply send me examples of them marking up the charts, and I see if I see potential in them or not. And if I see good potential, I select them, and if I don't, to be honest, there were so many requests, I didn't even have time to go through all of them, but I went through most, and out of them, I was meant to pick 3, I ended up picking 6. So these are the type of opportunities I open up to you guys every time we hit a little milestone. Okay, but anyways, first things first, follow my Instagram, okay, to get in any opportunities like this. And what is this video gonna be all about? Lately, I've been seeing quite a lot of traders uploading videos on how to trade WYCKOFF, how to label out your schematics, okay? But I don't really see traders talking about if it's necessary to label all of these phases in your schematic. For example, your preliminary supply, your second test, your automatic rally, etc, etc, etc. You don't need any of that, okay? And I'm going to show you why, and a much simpler approach to trading the concept behind WYCKOFF, okay? The only things you really need to know is accumulation and distribution, okay? And you need to understand structure and substructure, because understanding substructure is essentially how you label out your changes in character. And what changes of character is, I'm going to explain all of that in this video. So first things first, let's sort of through this little slide that I've created. Why you don't need WYCKOFF, or shall I say why you don't need to label everything on the schematic, and why it isn't really necessary, okay? So over the course of a few months using WYCKOFF, I began to construct a much easier approach that doesn't require marking out all the unnecessary labeling, as it's simply not important, okay? Now, if we look at this is a very typical approach to marking out your schematic, okay? So we have our 5 phases: phase A, phase B, phase C, phase D, and phase E. And I'm going to tell you guys why phase A and B is unnecessary, and why we only need to focus on the UTAD, the second test, and the last point of supply. Okay, so right here we have a distribution, okay? And the examples I'm going to show you guys is why we don't need to look at this bit, and why we need to focus on the UTAD, the second test, and the last point of supply. Because simply, the UTAD would tap into your higher time frame areas of interest, which is going to be, in this case, your supply zone, right? You're not going to be trading these areas here, so what's the point of labeling them out? You're only making your charts messy, and it's really unnecessary, okay? The whole point is to identify it within the eye. Identify that price is slowing down as it approaches into an area of interest, which is your higher time frame area of supply, and UTAD will usually mitigate and tap into that area that you're interested in, okay? It's not going to tap in on the buying climax, okay? It's not going to tap in on the second test, or the in some cases it taps in on the upthrust, but in some cases it taps in on the UTAD. But the example I'm going to be showing you is simply when it taps into the upthrust and distributes over to the downside. But anyways, that's not really important. The whole point I'm trying to get across is why you don't need to focus on phase A and B, and all you need to focus on is phase C, as is the one that's going to tap into your higher time frame area, your supply zone, and then you can focus on the confirmation entries that you're going to get in on the second test or the last point of supply. Anyways, let's cut it short and get straight into the charts. Right here I have an example of the Australian dollar, okay? And what I have marked out right now is examples of marking out the whole schematic, and then I'm going to show you guys an example of an example where I don't mark out and I don't label out any areas of the schematic, and a much more easier and simpler approach than marking and having all of this unnecessary stuff on your charts. Okay, so as we can see here, phase A, we have our preliminary supply, our buying climax, our automatic rally, our second test. Now, as you can see, there was no trade that we have taken during these phases, right? Labeling them out is very unnecessary. Okay, we have clearly identified our area of supply that we're interested in, which is this area right here. Okay, so marking all of this out, looking at what price is doing here, to me is very unnecessary, because I'm simply being patient. I'm waiting for price to wait and tap into this area of supply. So why would this price action be necessary to me? Okay, it isn't really. Labeling the schematic, not really necessary. All that's important to me is waiting for price to tap into this area of supply. Okay, and then the next part that's important is that rejection. Okay, because that rejection will usually change character on the lower time frame. Okay, so as you can see here in this price range right here, if we break it down, let's replay price back here. Okay, and head over to the 15. Let's just head over to the 30. Right, what can we see? Price is printing higher highs, okay, and higher lows. When price tapped into that area of supply on the higher time frame, that was our upthrust. Okay, we had that beautiful rejection, which left over a lot of inefficiency. Okay, but that rejection, what did it do? It broke that structure. That's what we call our substructure. Okay, so it simply broke this low. Now we'll call that our change in character. Okay, because it's simply changing directions now. Once we get that change in character, and we've identified all of this inefficiency, what do we know when we identify imbalances? Price is going to retrace to fill it in, right? But anyways, before I move on to that, let's go back into the hourly and continue with the schematic and why there's no point of labeling it all out. Okay, so as I was saying, all of this price action that we had here, it wasn't really necessary to us. Okay, what was necessary to us was this area of supply that we were waiting for price to tap into. Price has now tapped into that area and rejected nicely. Okay, so now what we are interested in is that upthrust. Okay, why? Because it mitigated our area of supply, and when price taps into our area of supply, that's when we're gonna start to look for our selling positions. Okay, so we didn't need to focus on phase A and phase B. So what we're gonna do now is get rid of that. Okay, we're gonna get rid of all of this because it was simply not necessary. And again, the whole point of what I'm trying to do here is build a nice and a much more simple approach to trading these markets and making it less confusing for all of you guys. Okay, now that we got rid of all the labeling that we didn't need, I'm going to show you guys the simple approach on how I would trade this. Okay, so number one, I've identified my area of supply. Cool. Number two, I'll wait for price to tap into that area of supply. Number three, I'll wait for that rejection off of that area of supply. Okay, now once I got that rejection, I'll wait for that structural break. Okay, our change in character. And as you can see, we got that on that 30-minute right here. This low was broken. That's my change in character. Once I identify that change in character, I then mark out my new area of supply. Okay, and we labeled that off of the hourly. We have that very clean indecision candle that was created. Body in the middle, wicks on either side. We mark out the low of the wick and the high of the wick. Okay, now price cycle, guys. Yeah, what's this? Consolidation, right? What's this? Expansion outside of the area of consolidation. What did that expansion create? Inefficiency. Okay, now the task of the retracement. What's the task of the retracement? To fill in any imbalance. Okay, let's see what happens now. Price is pulling back. Boom, fills in that inefficiency. Okay, it has now tapped into this area of supply. Now we go short. Okay, now you see how we avoided marking out the schematic and why it wasn't necessary. We don't need it. Okay, the whole point of what I'm trying to do here is make it simple for you guys and avoid all of the messiness on the chart. Okay, all you need to do, wait for price to tap into your zone and wait for that rejection. We got that rejection. Okay, we labeled out a change in character, so now we have a confirmation that price is willing to move over to the downside. okay? Because look, we have all of this sell power that's coming into the market. Price pulled back to fill in the inefficiency, tap into this last area of supply. Now, if we were marking out a Wyckoff, this would have been our up thrust, okay? This would have been our second test, okay? But you see, I don't need to mark that all out. It's unnecessary. Price is now pulled back into the new area of supply. Is more logical, okay? Now you have more logic behind why you're entering. Price pulls back to fill in the inefficiency, and now it's going to reverse to seek for any liquidity. We have some trendline liquidity building up here. I don't even need to mark it out. We can see it. We can see some trendline liquidity that's built up here. So the reversal can seek to take that out, okay? Now, we'll go short of this area of supply right here with our stop loss at the top of that wick. All right. Now, in terms of take profit, we can target many things, okay? You can target that area of liquidity that I had marked out, but I'll be targeting some imbalance that I had marked out down here. If you can see it here, we have some imbalance that hasn't been filled, okay? And we have this unmitigated areas of demand. So that's why I was simply targeting that area. So if I actually move my TP down here, as you can see, we have maximized our risk to reward. Now we have almost a 1 to 15. Whereas if we entered directly off of this higher time frame area of supply, you would have still got a good return, but compared to that confirmation entry that we got in on, it won't be the same. Okay, this would have been a nice one to still good. Okay, you got a nice 1 to 12, but compared to the confirmation entry, you almost got a nice 1 to 15. Okay, but anyways, back to the point. Price has now pulled back, create that second test, but in our case tapped into that area of supply, and now we're going to begin to distribute over to the downside. Okay, so as you can see, now in this case here, you would have had your sign of weakness, okay, and price is simply carrying on distributing over to the downside. Multiple lows were broken. Once those lows were broken, you mark out your new area. Again, every time a low is broken, you'll mark out the new area of supply that's created. We have some inefficiency here. We have some area of supply right here. So again, if you want to jump in sales, this would have been, if you were using the Wyckoff schematic, this would have been your last point of supply. Okay, so essentially you could have jumped in another entry right over here. But what I'm trying to show you guys is why I just re-entered without marking out the whole schematic, okay, because it was unnecessary. Simple price action, okay. Price broke structure, pulls back to fill in any inefficiency, taps into this last area of supply. And again, what do we have right here? An area of again, the price cycle, people. That is all you need, yeah? Consolidation, expansion, retracement to fill in the inefficiency, and then the reversal to continue the move over to the downside. So we had our entry number 1 here, entry number 2 here. And then we continue to play price. Okay? We'll just wait for it to TP. Let me set up to the high time frame. We don't want to wait that long. Okay, smashed through the TP. And that's it. Look, we avoided all of the messiness, okay? We avoided labeling out the schematic. I showed you guys why we don't need it, okay? And how to make it much more simple. All we did was wait for price to tap into our area of supply, okay? We waited for that rejection, okay? We marked out that change of character, which showed us some willingness to move over to the downside, okay? Some sellers coming in. Price pulls back to fill in this inefficiency that it has created, taps into that unmitigated area of supply that we had on the hourly, and then begins to distribute over to the downside, okay? Once that structure, that low was broken, price pulls back. My apologies, people, the same issue happened again. The camera cut out, but let me try to get back into the flow. Okay, so where was I at? I was at this point right here. Now, as I was saying, price broke this low, okay? Once it breaks that low, we go with the new created area of supply that hasn't been mitigated, okay? We can clearly identify one at this point right here. If I actually get rid of this, okay? Once we realize this structure was now broken, we go off the new area of supply that hasn't been mitigated. We can clearly identify one at this point right over here, okay? We have that very clean indecision candle right there. As you can see, if we head over to the lower time frame, right, we have this area of consolidation. Again, the price cycle, area consolidation, expansion, which broke structure, retracement to fill in any inefficiency, taps into this unmitigated area of supply that we marked out over the 2 hour, Okay, and then it begins to continue the move over to the downside. Now, in the Wyckoff's perspective, again, this entry would have been your second test. Okay, once you get that sign of weakness right here, this entry would have been your last point of supply. Okay, but notice how we got in these trades without labeling all of the schematic, because it wasn't necessary. All that was necessary was price action. Okay, the structure, order flow. Okay, we waited for that change of character, that substructure was broken, which signaled to us that willingness to move over to the downside. Okay, and then we had that distribution over, which broke this low. Okay, again showing willingness to move over to the downside. Now that was our sign of weakness. Okay, here we would have labeled SOW. Okay, and at this point over here we would have labeled it LPSY, last point of supply. But as you can see, that wasn't necessary, because we know once this low was broken, price will pull back to fill in any imbalances. We can clearly see we have some inefficiency here and some unmitigated areas of supply here. So we know price is going to pull back, tap into this area of supply, and then continue to distribute distributing price over to the downside. Okay, and it hit TP. Now this trade again was 1 to 15, and then this re-entry would have been about, I don't know, 1 to 10. Okay, almost 1 to 13. Okay, so you'd have got some nice returns on this trade. And as you can see, guys, we didn't need to label the schematic. Again, we use the same concepts I repeat in every single video. Supply and demand, price tapped into our area of supply of the hourly, showed some rejection. Okay, we had that change of character right here. Price pulls back to fill in the inefficiency, tap into that area of supply, continue to move over to the downside. Another low was broken. That means there's a new area of supply that was formed. Price pulls back, fills in the inefficiency, taps into the unmitigated areas of supply, and it continues the wave over to the downside. That's all there was to this trade. We didn't need to label the schematic. It wasn't necessary, and the chart looks much cleaner. Okay, so that's all there was to this video, people. I hope this makes it much easier for you guys, and it shows you guys that you don't really need to put in the time and effort to identify your preliminary supply, your automatic rally, buy, sell, climax, whatever it is, unnecessary. Okay, focus on structure, focus on your zones, focus on the price cycle, and that is all you will need. If you guys are interested in joining in the team, okay, I want to learn the rest of the concepts required to understand this strategy, simply click the link down below or head over to my Instagram, and the link will also be in the bio. Okay, head over to zmcapitals Academy, and then the website will now load up. I'm going to simply log out to show you the exact procedure that you lot will go through. This is what the website would look like. If you scroll down, you'll see the course curriculum right here. And then when you want to sign up, head over to get the course now. Fill in your details, create an account, go through with the payment. Once you've done that, log in with the new account that you have created, and then you're going to get a My Dashboard section on the top right corner. Once you've clicked on the My Dashboard section on the top right corner, this will pop up. For you guys who of course want to resume course, is going to say Start Course. Select that, and then the first section will be to join the community. Once you've selected the first section, you're going to go to this link right here, and it's going to send you to the invite link to join in on the Discord. As you can see, we now have 194 members in the team. Okay, so once you've accepted the invite, you're going to load into the Discord. You're going to have access to where I'll send all my trade ideas, an area where all the students will be sharing trade ideas with each other, and we'll be talking about everything, to be honest, talking about market, talking about ourselves, self-development, many things. To be honest, we just waffle, okay? We talk about multiple things. Sometimes we talk about gym, etc. It's just a nice area to communicate with like-minded people, you know what I mean? But anyways, once you've had click the link to the Discord, you would have been sent straight in, and then you can head back to the website to continue with the rest of the course content. Okay, people, I'm going to wrap up the video here. If you lot do have any questions, do shoot me a DM on Instagram, and I'll get back to you as soon as possible. For now, people, I will see you guys on the next video. Take care.